Welcome to Dave and Dom Demystify, a FinTech Futures podcast, helping make sense of the world of FinTech and digital finance. Please sit back and listen as the two Ds take a subject and discuss it to make it clearer and easier to understand.
Demystify.
Welcome everybody to the Dave and Dom Demystify show, and this week we are going to demystify Agora. And to tell us who Agora are and a little bit about himself, pardon my French, but it's Arcady Lapiro. Over to you, Arcady.
Good, thanks for having me. It's my old French. I'm so long in the US that I forgot, and I'm already French.
Fantastic. Can you give us a bit of background on yourself? How did you get into core banking, and also a bit about the company?
So I'm Arcady Lapiro, CEO and founder of Agora. We're a US-based company, so we are a mix of next-gen core banking / embedded fintech. I'm originally from the fintech and the banking world. Back 2 decades ago in Europe, I was part of a founding and management team. We built a group of companies at the same time. One was the ancestor of a kind of Monzo. It's still called Fortuneo Bank, so we built it from scratch. Complete digital bank. We had a license down the road. We grew within 8 years to $20 billion asset. We also built the ancestor of bank as a service, which still operate today, same name, same business line. We grew to over 60 billion asset under custody. So that's my old age or my young age. I don't know what to say. The largest credit union in the world bought us just before the IPO. I stayed to secure a merger, and then I left and I moved to the US. And I'm deeply involved in the fintech all these years, mentor advisor of several US, Canadian, Israeli fintech, and also an advisor to a large private equity investing in financial services. And then I launched Agora. I wanted to go back to the entrepreneurial world.
Can you tell us a bit about Agora? Because our audience might not know, because there's quite a lot in Europe. I know you're well known in the US.
Yeah, so we're US-based. There's a lot of company launching in bank as a service or embedded fintech. The latest news yesterday was in the UK with Griffin grabbing a UK banking license to deploy its banking as a service offering. But you have in Europe, you have a Solaris Bank, you have a Griffin. You used to have a Rails Bank, but that's another story. You have the French about Trezor. So this is all the French bank as a service. In the US, so we're US focused. It's a complete different market. So we have built a complete platform, a ledger, a one-stop shop with card issuing. We have a bank sponsor partner. We are a partner with working with Visa, MasterCard. We have all kind of solution, but also we're building completely white label banking solution and also innovative features. So what you may find with N26 months or Revolut, certain new features, innovative that they deploy in-house, we build something like that. So we are US focused, bank as a service, but bank as a service is going after fintech. We have a platform which is going after fintech, of course, but also banks and credit unions in their digitalization roadmap.
You mentioned the differences between the markets. I know many people will understand what the differences are, but I think there's quite a lot of people, won't. So I just wondered if you could give us some thoughts around those differences, because obviously the US has a different approach to these things. So it'd be interesting to understand that in a bit more detail.
Yeah. So first, what I'm going to state is obvious. It's like the US is different from Europe, not just by the size, the population, one country, one currency, but 50 states. So everything, it makes life complicated when you have 50 states. That's 1. 2, it's like you have different regulators. You don't have, not talking about UK, so you have one regulator, but it's like there's not one legislation, there are few. The FDIC, the OCC, the Fed, and then you have CFPB, etc. So, and then coming back to the geography, it's a completely spread market. You have over 9,000 banks and credit unions in the US. So I'm not talking about Chase, Bank of America, Citi. These are the biggest, but the majority of the banking system, it's community banks and credit unions. That's where the majority of the business. And you have 9,000 different institutions. 2, it's very spread out. So it's a completely different market, very spread out, which has different impact for bank as a service. In Europe, certain providers can grab a license, not just a bank, they can be electronic money issuer. Others in the US, you have 2 parts, 2 components. One, you have the bank sponsor, which are launching bank as a service. And on the other side, you had, and you still have, a bank as a service tech provider, which they don't have a license and they're focusing on the technology. And there's some actual turmoil in the US because certain providers, I won't say non-compliance, but I will say non-compliance approach because I'm a former head of compliance. They took an approach by being the middleman. That means they were handling certain QAC, certain compliance, not issue or concern, but task on behalf of a bank. And that's not compliance from day one. And that's why certain providers are very big. You see your reaction. You have a reaction right away because you know the industry. But in the US, most of the bank as a service tech provider position themselves as the middleman. So there was even a case where they were launching fintech.
I mean, why would you take the risk? I mean, clearly it's not paying off, but
Exactly. So that's why there's a huge change actually in the US among bank as service tech provider. But you see, your reaction take 1 second to react. It took 3 years for certain banks to understand that and certain VC to understand that. You reacted in 1 second.
In terms of the market, I mean, it's kind of interesting, that whole thing around lack of understanding. But I guess if you've got 9,000 institutions, a lot of them are going to be quite small. Do they understand the opportunity for BaaS and embedded banking, do you think? Or is there a need to really, like, as you're thinking about your proposition and how you can, do you need to educate the market as well?
I used to need to educate the market. Now less and less, because finally the market is awakening. And I'm coming from industry. What I'm doing today, I did 2 decades ago. So there's nothing new in the industry, just the technology is new. But the concept of core banking, of embedded fintech, of fintech, it's not from today. It's not from 5 years. It's not even from 20 years ago.
Yes.
It's almost started like 40 years ago. And you know that, Damesh, right? So what I'm saying, it's like the opportunity is, it's like just putting the numbers on the table. Around 9,000 financial institutions. Today, approximately 136 bank sponsor. Approximately 620 fintech brand. So I'm going after the numbers. So where is the opportunity? So if you do a calculation, there's approximately 31% of US bank sponsor that power only one fintech. How can it be successful down the road? And you have many bank sponsors jumping into that. So I'm not saying that there's no future in powering fintech. There's always is. What I'm saying, it's like there's a need to power them with the right bank sponsor, which have the right compliance oversight in place, but also with the right technology. If you're a fintech and you're looking to launch a checking account with a plastic card and being connected to the payment rails, it's not going to fly. So that's where the technology is needed. So on the fintech side, there's a change in the spectrum of providers, and there's a change also in the need of a fintech themselves. They need a bank which is more compliant, and also with a technology which is more scalable. And that's where we fit Agora. We build our technology to be multi-tenant, real-time, and modular banking. That means we can plug and unplug providers for the same use case. We can take for a segment customer one from the same fintech, this provider or the other provider. That's what I call modular banking. What we believe where the real opportunity is, it's on the other side of the spectrum. 9,000 banks and credit unions. They're competing with who? Not the fintech. They're competing with Chase. Chase today, they have a budget of $15 billion on the IT.
Phenomenal.
Yearly, $15 billion. If you take all, yeah, but after that, when you do the split, what's going to digital transformation, what's going to innovation, it's another number, because how much is just to maintain the ongoing transaction operation? How much is to fix the patches? How much is for investment? Just on Viva, the Greek investment they nearly made $1 billion investment. So you see, the budget can be relocated depending on the size of Chase, but still, 15 billion, that's a number. And on the other side, they're opening 500 new branches in the US, 500 physical branches. So the real enemy of these traditional banks are Chase, not really Citi, not Bank of America is a competitor, but they're also competing with Square and players like that. On the other side, you take all the legacy core banking, how much are they spending? Altogether, less than 3 billion. Again, is it innovation? Is it fixing patches? That's another discussion. So that's why we see it by saying, like, to these small community banks and credit unions, you can compete with Chase as it. You can rely on your legacy provider. You can stay mainstream. You're local. So you need to focus on niche segment, on niche customer, niche product. And that's where we're coming. We have a platform. We can deliver certain features on demand. We have a white label banking solution for certain niche market. Today, teen banking and SMB. And next year, we're launching 2 additional niche, which are the elderly people and the migrant people. And when I say that, it's from the backend to the front end, including the app, including the features and the product, and not just niche, just not vanilla plain features, really advanced. For example, for the elderly, we're going to do like a embedded wealth management center, one point of contact to put all wealth management information to be accessible by the kids or by a curator, things like that. I'm giving one example. We're also going to launch.
That's a great example. Yeah, fantastic.
Very niche, you see, I can be more elaborate. I'm going to give another example on the tin product that we have today. So go and in the UK, also in the US, you have Greenlight in the US. When you're going to this tin product, who can control the account? It's mostly one parent, not the two. We build a setup where two parents can access and control the account. I'm giving an example. It's like, because we're not focusing on the marketing. We have a technology platform, and I built myself a bank, and I'm defining what I believe is good, and for my own kids, what is good as a use case, and we deploy it. So when we do white label banking solution, we're coming with enhanced feature. So that's why I see the opportunity in the US. It's all these 9,000 banks and credit unions to provide them niche product, niche features, and down the road also to be the sidecar provider. Because to replace the core, it's complicated. But to be the sidecar, that's a way to go. And that's what I did 2 decades ago in Europe. And now I'm replicating this business model.
Is that multi-tenant for the US, or can you go to different countries? I mean, I recently wrote about Revolut doing it across different countries. And I've spoken to lots of different vendors as well as Dave, right? Now, we haven't really seen somebody with an implementation that can do it across different countries. But I'm interested in your scenario. Your market's big enough that for you just to address the States, but is your model, or can your platform actually handle different countries as well?
Yes. We used to be originally in Europe. Our platform used to be in Europe. We used to have 150,000 users in Europe, and we did a spin-off, and I concentrated our business in the US. But our platform was initially built for European market, and then I did a pivot to come to the US, and that's why we spent a lot of time on integrating with a bank sponsor, the card network, all the providers. So our platform is country agnostic, currency agnostic, language agnostic.
And product agnostic. Can you handle mortgages, credit cards, accounts, loans, any product?
So today we're focusing on checking, debit, and we're going to deploy credit card. We have mapped the way to do loans. So we have a provider to do the loans. So 2 things. One, it's the software to compute, and 2, it's the balance sheet. So now to extend to a market or to extend to a product, we have 3 ways to go. When I say 3, it's like 3 points to map. One, it's like, do we have a capability to build in or not? So for example, if it's just like to provide a basic loan, we can build in a house. It's not complicated. Certain loans are more complicated. So, auto loan, for example, it's more complicated. So we have a validated potential provider for that. 2, it's like a regulatory. Do we need a license? Yes, no. When I say we always need a license, that's not the question, but what kind of license? Is it a banking? Is it national? Is it regional? Is it like, there's different kind of licenses. So in the US today, we can theoretically do it through our bank sponsor. 3, it's the balance sheet. So for that, it's like we have discussed with few providers, so which can provide the balance sheet. So today, no, we don't provide it, but yes, we can down the road provide. We already map the road. Coming back to a platform, when I called it multi-tenancy or multi-country, it's like we have a backbone. When I say the ledger and certain advanced features, and then the question is like, what's the charter needed? So do we need to plug with a bank or electronic money issuer or PSP? That's 1. 2, it's like, do we need to issue a card? Yes, no. So with our card issuer processor, we have taken one that we can plug it anywhere in the world, assuming we have a sponsor. And 3, it's a local requirement on the QAC, QAB. So we have a worldwide QAC provider, not the QAB. So to add a QAB component, we will need to integrate a local provider. But to implement a different country, it's just to upload or upgrade a certain of our drivers with certain rules.
I mean, it sounds like with my article about one call to rule them all, that you're almost there. But
we could, but it's like we're trying to be very local. It's like the US is big enough, and especially today when there's a downsizing on the fintech side, it's better to be on a large market. So I'm not saying the US is de facto the largest market in the world. It is. But going after Europe right now, it's complicated. You have many BaaS providers on one side, and on the other side, it's complicated to find this fintech, and regulators are really going after BaaS right now in Europe, more than in the US. What happened with Solaris? They just have a ban. N26 is not doing a BaaS. They're not doing BaaS, but still it's like they're capped by the regulator, so it's more complicated. And in the UK, it's like there's more and more control by the FCA right now.
Again, it's really interesting, but I go back to like the you're not absolutely right. I mean, it's a huge market. I think we as Europeans often look at it and ponder like, how do you get into the market? I mean, I guess you have to be there really to understand it and benefit. I'm thinking about the community banks competing with Chase, which I think is it's a great kind of soundbite, and it makes perfect sense. Like, I don't know, I'll pick somewhere randomly. I'm a community bank based out of Manchester in New Hampshire. So I want to offer different services so that I can really keep my community customers with me rather than them being tempted to go to a Chase or a Citibank or something like that. So that's the opportunity for you, is to come in and really help them upgrade their proposition by providing some of the things that you're talking about. I mean, sorry, it sounds, I'm really oversimplifying things, but I just want to make sure.
Yeah, so to simplify, it's like really your community bank, it's like, can you compete with Chase by opening a new branch because Chase is opening in front of you? That's not going to, it can be an option, but it's not the solution because you already have your branch local. So you need to capitalize on your customer and your local position. On the other side, Chase, they're opening branch, they're going really aggressively on the digital. And right now they're going aggressively on a credit card, on auto loan and mortgages. So it's like you need to cater your customers, your local, you know your customers, you need to cater, but you also have to be more digital. Will the customer go to branch? Yes. Will they come to a branch to do banking? Less. So that's why they need to strengthen the digital offering. And again, it's like digital, it's not just to update an app or to have a cool website. It's really the features. You have to make life convenient for the customer. So I'm going to give an example. It's like if you're a customer, your card is blocked, you're frustrated. So you will call a call center. It's for a community bank, it's complicated. And then you will go to a branch and then everybody will lose time and money. If you push all the control in app to the end user to do a claim on a card, to dispute a transaction, to block a card, to ask a new card, which everything you, theoretically speaking, you can do with Revolut, for example. It makes life easier for the community bank. It's reduced their operating cost, and you're increasing the experience of the customers. This is basic. This is not a new product. This is just like you adjust to what the competitors are doing.
Perfect.
Now coming back, how you can enhance your product. So your community bank, Chase right now is going after the kids aggressively. So they claim that they open 1 million account on kids. So the average age of a credit union client and a credit union member is approximately 50 years and plus. So if you don't grab the team right now, you're losing your future customer base. So that's where we are right now. We have identified this risk and we have a solution for them, fully white label. And now coming, the last thing, it's like your community bank, you want to focus on auto loan, for example, which is not a great market right now because it's super risky, but still it's local. It's often, it's like in Europe, especially, it's like you have your main relationship with your customer through a mortgage. In the US, it's a lot through the auto loan. That's where you start often. So do you think a community bank have a good digital experience on, you see the reaction? So that's why they need to upgrade, and we can come with a solution. And when they go to the legacy core, when they go to a provider, each of them will provide a break of it, or they will provide a comprehensive solution. But Damesh, you know that when your legacy core is coming to you with a complete comprehensive solution, is it a good one? You answered, I didn't. So we're coming by really like, when we're offering a solution, it's like we're trying to bring like a best in class and from A to Z. So when, for example, it's like the TIN account or the SMB account, the way we built the SMB account, it's like all these community bank region, they don't have big SMB, they have small one. So the way we build it, it's almost like an expense management for small company and for expense management on one side and also onboarding new employees.
I mean, look, I should probably qualify my answer, right? And the fact is that the world has moved on. In the old days, you could build a full stack banking solution and have a good enough compared to the rest of the market. What's actually happened over the last decade is that each of the banking components have started to get more and more specialized. So two things are really compromise the incumbent vendors and fundamentally undermining their future. I absolutely believe that the incumbents are in danger unless they acquire a new banking platform. And for the two reasons that are, firstly, they can't migrate their legacy stack onto a modern technology stack. It's not a migration of COBOL onto Java. It's a rewrite for a different kind of technology, which requires code that doesn't exist. A migration means that I'm translating something from English to French, or i.e. COBOL to Java, which can be done in an automated way, but it doesn't get you to a microservices architecture. So first thing is that technology doesn't migrate to the new world. Secondly, the business functions themselves, as we know, I was involved really early on with AML and KYC issues at ABN AMRO back in like about 2005. And since then, the things that you can do to validate bad actors and check and the regulations themselves have evolved massively. So what you could do in the past with some legacy solutions is no longer good enough because they are border average solutions, not specialized solutions. And that's the challenge now. How do you keep up with every aspect of every different banking function as an incumbent vendor? I mean, you've got the technology problem, and now you've got this business problem that, fraud detection, AML, KYC, credit scoring, all of these things are becoming empowered by things like AI and new data sources, which these incumbents are quite frankly, too far behind to catch up. Anyway, that's my rant, but I wanted to qualify that. I mean, Arcady, I guess the question to you then is like, how do you stay up with all of this stuff, with the changes that are in the marketplace?
So first of all, it's like we're not in charge of the compliance. So I'm a former head of compliance. I took a look at that. I said, is the compliance on our side? Yes, no. When I say validated, in our roadmap, I said, it's not our responsibility. Being said that, we have implemented an AML solution, KYC solution, and we put that in the hands of a fintech on one side. On the other side, we tell the banks and credit unions either they use our system or they use theirs, and we provide the data, but we're not in charge of monitoring that. So as you say, legacy incumbent. So I didn't start, when I launched Agora, I didn't have to start with the legacy AML platform and KYC provider. So we decided which provider, we did a mapping, and we took the best in class. So I didn't have to rely on a legacy infrastructure. So that's a key difference. In 5 years from now, maybe less, in 3 years from now, I will have to ask again my question to review the vendors, like how to update. But right now, it's like we start from scratch, so we took best in class. I just want to come back on what you say by saying like the incumbent, they need to buy new platforms and to migrate. I agree with you in principle. But then coming to reality, I would say I disagree because some of the incumbent, they bought a platform, but they don't migrate. Because now, just think about that. You have your existing stack. Let's say in the US, you have 3,000 banks and credit unions. You come to them and saying, hey, guys, I acquired, not for expensive, by the way, but I acquired a new platform and I'm going to migrate you. First, the bank will say, how much cheaper? Not how much I have to pay to migrate, how much cheaper are you going to make? Two, they will say, oh, you're going to migrate me, I will take a risk. So what's happening most of the cases? This incumbent, they're coming to the community bank saying, they don't say, we're migrating you to this the player that they bought. They don't, by the way. They say, oh, we're going to keep you on our existing stack and give you a 20% discount just to renew for 5 years. That's what's mostly happening. So it's not like the way I see mostly for legacy player, incumbent player, it's more like to use eventually. That's what I would do if I was them. I'm not sure they're doing that. They acquired a platform, they keep their core, and they leverage the player they acquired as a middleware to cross-sell new digital products. So the way I would see for them to keep, not just to keep afloat their client, is just like cross-selling digital features. Hey, you want issuing virtual card, you want a full digital onboarding, you blah, blah, blah. We provide you an additional patch.
I agree. I mean, the migration is always a big challenge. Yeah, I mean, how many have been truly successful and time to budget? I mean, very few.
And in the US, I'm not talking about Europe, but in the US, incumbents, so FIS bought a player, Fiserv bought a player. Jack Henry didn't. They decided to build in-house. You know what it is when a legacy incumbent is telling, we're going to build in-house a new core and deploy it.
Minimum 5 years. And that's if you have a brand new team that doesn't have legacy thinking. The danger is that you reinvent the past with new technology. That's the problem.
Exactly. Totally agree. And on the other side, the incumbent, if you're talking about the incumbent, there's not just a provider, there's a bank. So you saw the news about UniCredit in Europe, potentially looking to acquire Vodano. So it's going terrible. Let's say they finalize the acquisition, just to migrate UniCredit to Vodano, it's for themselves or to do B2B. And why the competitor of UniCredit use them as a provider.
Yeah,
So
it's very, very interesting.
it's a complicated play.
I'm very conscious of time, though, so we're almost at the end of our podcast. But I was keen to understand, just because it's the topic du jour at the moment, around things like AI and Gen AI and machine learning. Are they things that are interesting your community bank customers, or are they asking you for how they can sort of incorporate some of these things, or are they just at the point where they just want to compete with Chase and they see that through interesting products and services?
So regarding AI, there's a lot of fear among banks, because it's like the first impact, it's like, how is it going to impact my workforce? When you see the news about Klarna 2 years ago, they lay off 700 people. It disconnected the two. And then last week, they say, based on AI, on the chat that they made, it's equivalent to 700 people. So there's no relation between the numbers, but just if you take a look at Google, you will see the same exact number on both sides, which are completely disconnected. So there's a fear about workforce reduction. So now, if you're a bank, so let's say Chase, they're very aggressive on the AI. They recruited a lot of data analysts, a lot. Community bank, again, they cannot compete. So now it's like how they can leverage AI. They can leverage AI, theoretically speaking, for cost reduction. And once again, it's like instead of going to a branch, you have a enhanced chat where you can put AI and provide more information to your customer in real time. And then you have a data analysis on the loans and mortgage. So that's where the focus is, which is not on our case. The way we put us AI, it's mostly in the chat capabilities. So we have a chat capability in our platform. That's how we put the AI. And also we put the AI in terms of QA for the testing to enhance and accelerate and reduce our own cost. Right now, what we hear about AI from the community banks and credit union, it's mostly like, it's not AI, it's more like, what are the features? Oh, you embed AI in your features? That's great. It's like a buzzword for them.
Fantastic. Very interesting. Well, listen, thank you so much for joining us today. That's been
Thank you, guys.
a real tour de force in terms of understanding not just sort of what your platform was all about, but a bit more about the American market.
Really appreciate your insights. Thank you so much.
It's a different world. Thank you, guys.
Thank you for tuning in to Dave and Dom Demystify. We hope you enjoyed the show. Don't forget to like and subscribe, and tune in next time as we take another topic and demystify it.